Hi, thank you for watching. Today I'm going to talk about why you should invest in the S&P 500 rather than trade in the S&P 500. It's always a good idea to invest in the S&P 500 because historically it has gone up by 10%. So many people have tried to trade the stock market, find individual stocks, but if you are one of the person who has been trying all these, learning all type of courses, but you find that you're just not making money, the reason is very simple, because trading and investing takes a lot of energy, takes a lot of effort, takes a lot of time, takes a lot of patience, takes a lot of timing. And for many very smart people, we are used to working hard and getting what we want. But the thing is, the market is, even if you work hard and buy every day, the timing is not correct, then you'll be losing money. For example, if you want to apply hard work in the stock market and buy every single day, especially when the market is going up, and then suddenly one of your stock collapses. So what's going to happen? Most likely you're going to suffer a panic attack, especially if you're losing quite a lot of money, and then you sell at the wrong time. So my website here, I have been slowly transitioning into advising people to build wealth rather than trade wealth, right? So this is for you if you have lost more than 100 to 500,000 and you no longer believe in the lies of trading and fast money. Yes, there are people that can do it, but maybe it is not good for you to trade always. So the lesson here is why do you want to invest in the S&P 500 rather than trade stocks? Alright, I hope you can see it because I'm using this Google Docs. Okay, we'll make it a bit bigger. Now, number one is it takes less effort, energy, and mental stress. Okay, if you trade stocks, if you have been trading stocks, it's going to take a lot of mental stress and energy. If you're making money, that's okay, consistently. But if you're in a cycle of going up and down, very stressful, then, and you have a day job, you have a business, it's going to affect your business and also your family life. Second reason, which is I think the one most important, is average 10% return, right, for the past. Now, I'm not exactly sure the years, alright, but some studies have shown that average 8 to 10% return over many years. I just put it 100 years because historically the S&P 500 has been going up for 10%. Okay, you can read articles, studies, whatever. The range can be 8 to 10%. Some years, right, could be 12%. And then thirdly is you don't need market timing. So one of the ways to invest in the S&P 500 is to buy every month, and you will come up on top. Now let me show you the chart of VU. VU is the ETF for S&P 500, which you can buy. Let me just load it. It's taking a bit of time because my internet connection is slow. So you can see Vanguard S&P 500 ETF. Now if we were to go to here, right, the price is about 560, then boom, all the way it drops to here. You're gonna have a heart attack when it drops to 440. But look at how it recovered. This is a daily chart. So I believe this is, I don't know whether you can see here, the black line here. The period here is about a month, 2 months, 3 months, 4 months. Yeah, this grid here is a time period of 1 month. So if you every month you invest right in the middle here, 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 you average out, you would have make money. You get what I mean? Let's go to the weekly chart of VU, and you see the market has gone up and down. It's gonna high here, and then it drops, and then it goes up and drops. But can you see, despite the sell-off here, the market has gone up over time? So if you average it by it every month, you're gonna make money, and you don't need market timing. You don't need to stress yourself. Even if you invest, think about how much money you have lost trading stocks, investing in stocks. 500,000, a million. If you had taken your money and put in 20,000 a month regularly, yeah, I mean, for those of you who have money, for those of us who don't have so much money, maybe $200 or 2,000 US dollars a month, you would have averaged out and still make quite a huge return. And if you have done it, I'm switching to monthly chart. If you have done it over the years since, okay, let's take 2020, the lows here. It's 200 something, and now it's 600. It's gone up 300%. If you average it every month you buy, despite the highs and lows, you would be making quite a lot of money. Way more than the way more than the 300% return. So let's say you bought here and here, okay, on a period of over 2,000 over days, which is about how many years is that? 7 years, right? No, 220 to 2000, 5 years. Yeah, return is about 200 over percent. Oh, am I correct? If you bought at 200, now it's 600. Wait, something is wrong. We got it wrong, right? Okay. Price range. Let's see. Okay, here to here. No, 200 to about 600 is 3 times return. So if you have averaged it out over the years, it will be definitely more than 3 times your return. So going back to these 3 things, right, it takes less effort. Average 10% return a year, and you don't need marketing. If you buy every month, definitely your returns is more than 10% per year, because you buy the dips. Right? So I am writing a book, right, how to stop losing money and start building wealth in the stock market with no stress. A step-by-step guide to investing in the US stock market. You only need to invest in one. It could be SPY, it could be VU, anything that tracks the S&P 500, and you need to do it over the years. So these are some of the chapters. I'm gonna finish it, and then you can grab a copy of it from my website soon. But you already now, at least you have the basic information of how to make money. Even if you don't want to buy the book, it's okay, because you already know that if you invest every single month, 1,000 US dollars, you'll be a great return. So let's imagine you have a scenario where you put 100,000 into an investment. So for the next 30 years, right, and 10% annual return. So when you put, let's just imagine that you had 100,000, you sold a house and you put it in the S&P 500. Without you doing anything, without you reinvesting every month, your return will be 1.7 over a million. So this is the chart, right? The graph. So you only contributed 100,000. You're doing nothing except being patient, and you gain 1.6 million without doing anything. So imagine if you sold your house for 2 million, US dollars, and you just take out a small portion, which is 100,000, and keep it. And you tell yourself, I'm going to throw the keys to the account. And I ask my banker, just keep it there in the S&P 500 for 30 years. Right? Yeah, you are 35 years old now. By the time you're 65, you have 1.6 million from that. Now, the return will be much more if you put in monthly as well. That means you start with 100,000, every month you put in 1,000. It's going to be a lot. So if you found this information helpful, do subscribe to my channel, and do look forward to my book. Right? I'll keep you informed when it's published. You can grab a copy of it. I'll see you in the next one.